Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. So basically for today, we'll just try to digest what happened yesterday and sort of take stock of where that leaves us for today. Looking at the overnight action, we're getting a bit of a relief rally here, especially in oil. So we'll talk about that and sort of where it leaves us here. Heading into what will surely be another volatile day in the markets. Our guest, Nick Shaheen, he will join us at 8:35. He is the author of Create Income with Option Spreads. Joel, I almost hate to ask, but what's happening here overnight?
It's good to ask on a day like this, Spencer. We're up 115 handles at 28.6275. Good old proposed task cut is leading us back above the former low of the move at 28.5375. Would love to see us close above that today. It's definitely a possibility at this point. 28.79. I had to add some levels, believe it or not, Friday's low, 28.98 even. I'm sure a lot of people would love that another 37 handles on the S&Ps. Crude rebounding today up 333 at 34.43. You have gold going. I'm sick of gold here. I might dump my gold position. Down 12.90 at 16.6290. Silver going the opposite way, up 1.5%, 2.6 cents at 17.08. Bitcoin up $250, getting back above 8,000. That's at 8,100. Triple D, would you say you don't look a gift horse in the mouth? It's just you don't look a gift rally in the mouth.
I think so. I mean, I've been selling every rally and it's been right every single time. So not buying the dips, I've been selling rips. So if you bought stocks yesterday into the weakness, probably a time to turn around and, look at maybe getting out of them already. I mean, some of these energy stocks are up 20% here this morning. So obviously they got just annihilated yesterday, but just go to the XOP. I mean, it's a nice bounce back. It's up 27% this morning because oil's getting a little bit of a lift. It was overdone maybe yesterday, so a little bit of what Spencer said off the hop, but just a relief rally here. I don't think this is the turn. I don't think, some people think that was it. That was the capitulatory event yesterday, and now we're off to the races. I don't think so. I mean, people have said that 3-4 times already. I don't think this is over yet. The reason for that is I don't just look at technicals. I look at potential headlines coming, and this virus is still spreading, and it's going to start spreading more rapidly, you've got to think, because it already is spreading. We just aren't testing. So what I did do yesterday, though, was I did sell my puts. So I decided at this point in time, I don't want to be short the market anymore. And obviously we knew, I've been talking about my put position there for the last month. We're almost 20% down yesterday. I was like, it's now time to not be short anymore. I'm not getting long, but I don't want to be short anymore. So I did sell my puts yesterday into the weakness. Those are looking like a really good sale here this morning because of the pop. I'm not going to reinitiate those because, like I said, I've got a lot of cash in my portfolio. I do want to eventually start buying some stocks too, but the first thing I was going to do before I start buying stocks was sell my puts. So I'm out of my puts. So now I am market neutral in my trading account. Obviously still long-term invested, but sitting with 70% cash, which is an uncomfortable position for me. I like to be around 30% cash. So all that cash needs to be put to work at some point in time. We know I talked about it for a month. I raised cash from the last week of January to the second week of February, 3 weeks early, because we continued to rally up there, and I was banging myself on the head because I was selling around 328 SPY, and we went to 338, and I was like, man, these were bad sales. I'm like, I keep questioning, am I going to be wrong? But it ended up being good sales at the end of it. Question is, do I get back in before we start rallying?
Right. Good old George. Italy shuts down the country and we're doing tax cuts. I mean, I don't know. I mean, as far as a long-term perspective of the market, I think we talked about this yesterday. There are rebounds, and yeah, if you bought stuff yesterday and you're hitting targets today, take it, man. Take it.
I think don't be. Yeah. What did you say?
Don't be shy.
Yeah. Don't, because we've seen this market rally 1,000, lose 1,000, rally 1,000, lose 1,000. We're up 1,200 points here. I would say don't be greedy is what I would say, especially on the long side. You come back in from a technical perspective, we are still very, very weak here. We are broken, even if you just want to talk technicals. So I think you're getting a pop here because all of a sudden Trump has taken a different stance. I mean, he tweeted out the ridiculous tweet yesterday with that every other single human being on the face of the planet keeps tweeting at me when I talk to coronavirus. Oh, it's just the flu. The flu kills more people. We've done the math on this show 100 times. It's anywhere from 10 times more deadly than the normal flu to 30 times more deadly. If it infected as many people as the normal flu, 10 to 30 times more deaths. So you're comparing apples and oranges. Trump tweeted that out. I think people, I think there obviously some people talked to him about that tweet because he took a major heat in the media for that tweet. And now you look and he's got a press conference and it was a different tone last night. He's like, we know this is serious. We're going to be handling it. It was a completely different tone. So now that, he's talking more serious, but I think the market likes that, hey, they're going to try to do something. They're going to, they're on this. They don't just think this is just brush it off. So that's good news. That's good news for the market. That's a reason we're bouncing back here this morning. The bad news is the thing is still spreading.
We're actually tanking right now.
Yeah, why?
I don't know.
I'm looking right now.
We're going down pretty good. I mean, tanking is, a strong word.
Yeah, I'm sorry.
But we just dropped 10 handles feels like a lot, Joel, because from our days. But in this market, it's probably just normal trading.
It's funny. It's funny because I talked.
Yeah, it does feel though. I agree with you. It does feel like a little bit of a tank here. But
I was thinking we were going to go back and retest.
Wait, here we go. Here we go. The White House is not ready to roll out a virus economic proposal. So,
oh God,
that's from CNBC. It's from CNBC.
So. Jesus Christ.
Okay, we'll watch our language here.
Sorry about that. I apologize.
But it's getting, so I don't know if they just want to manipulate the markets higher. Now the market's rallying, so like, oh, let's just cool this off a little bit here. We may not need to do this because the market's rallying.
There you
Stop
go.
being market dependent and start looking at the issues out here. I don't know if a stimulus helps the problem anyways. The market applauded it. Obviously yesterday or obviously last night when we've heard about this, and that's why we started rallying significantly last night. But again, this is not really a financial problem here. Yes, oil is a problem, and that's a new problem for this market, but the coronavirus is still the cloud, the big problem here. And I don't know if throwing money at this solves the fact that some people are going to be scared to leave their homes. I mean, I've bought a lot of supplies here. Even myself, because you know what? I don't know what's going to be happening. I don't know. Like if you look at Italy, they're on full lockdown now. Well, I don't want to be in my house with my 2 kids and not have some supplies. So I've got about $700 or $800 worth of food we've went and bought in canned goods, stuff that's not going to spoil. And the freezer is as full as the freezer can get. We got a big stand-up freezer. Our pantry is so full that we took books off the bookshelves and put all the food on the bookshelves too. So I just think if I don't need it, well, eventually you'll eat that stuff anyways, or you can do a donation to, there's lots of good charities out there that take canned goods. But if you do need it, then we got it. So that's my thoughts.
Okay. Can I do a little rant?
Always. We love other people doing rants.
Did you see the horse racing news yesterday?
No. Can't say I follow the horses as closely as you do.
This is a big story. Big story. Spencer, you want to recap it?
I mean, I guess that's what we're doing now. Okay.
We could talk about other things. We just don't have to talk about the coronavirus.
What happened with the horses?
Sure.
Joel likes his horses.
Yeah, Joel.
Nah, not as much.
He doesn't like his horses. So the Southern District of New York, the biggest district attorney area in the country, indicted 27 people for illegally doping racehorses. One of those indicted was a trainer of Maximum Security, who you may remember. He would have been the winner of the Kentucky Derby if not for his disqualification there for interference. So one of the most notable racehorse trainers of the past few years has been indicted. So that's why Joel's upset.
Yeah, and I'm upset. I'll just give you a little history on this. I grew up. I grew up with the racehorses. My dad owned harness horses. From actually, I got a picture I've showed the guys in the office from May of 1963. I was born in October of '63, and there's a picture of my mom in the winter circle at Washington Park in Chicago with Mr. Dudley. So I grew up on the racehorses. My dad had stables of horses. We bred horses. We had harness. I mean, had 8, 10, 12, racing at one time. This big old stable. And it was fun. I used to get to miss school because I would fly different places, go see the horses race. Really big part of my life. And the older I got, also my dad represented the Michigan Harness Horsemen's Association for over 40 years. And he's in the Michigan Racing Hall of Fame. And that and a nickel will get you a cup of coffee. And the older I got, my dad we own less and less horses. And finally, when I was in college, I'm like, Dad, what, you represent the horsemen. We've been doing this. And I'm telling, this is when I was in college. So this is the 80s. And he said, I go, why don't we, what happened to our stable and everything? Varsity Acres. He goes, I don't want to be involved in chemical warfare. And he told me that 20 some years ago. And then when the off-track betting came in, that crushed the industry. And now this, and I'm not official yet, but I may not bet on the Kentucky Derby. I'm so disgusted by this. This is such horrible news. And the only reason I'm saying it, I have no position in Churchill Downs, CHDN. But man, I hope that thing rallies because I'd love to get a position in it. And, so keep an eye on that stock. It's just a horrible
You'd like to get
thing.
short it.
Yeah. Yep. Just absolutely just terrible news for animals, animal cruelty. These people should go to jail, be locked up in jail. And I mean, what they were doing, they were creating new drugs. No one could track it because they were creating these new drugs. And man, oh man, it just to me, it just of all the bad news yesterday, I thought that was horrible news.
And me and Spencer probably didn't realize the news until Joel told us.
Spencer's the one.
Out of all the bad news yesterday, coronavirus, the oil slide, but the horses doping, that's the worst.
Yeah, an aviator once said
it hit you close to home.
Yep, off-track betting. He's saying ruin the sport of kings. My dad fought his ASS off to fight against off-track wagering. And I don't know if it's still the same way, but the horsemen in Michigan, I don't know if there's any left because they're closing all the tracks. They received the largest percentage of the off-track wagering out of any horseman in the country because my dad fought for it. So be careful. Keep an eye on CHDN. I know we do a lot of RANs. People are probably not too happy with that one, but man, oh man, I write about the Kentucky Derby. I love it. I watch it with my family. I have mint juleps, and man, is this tainted. So anyways, back to the markets.
All right, you just learned about your horses. So we teach you
love the
everything
horses,
on this show.
man.
I go on my hockey rants. You're allowed to do a horse rant every once in a while. So again, back to the markets. We've now rallied back some of those losses that we had. Or some of those that just from the recent sell-off that they're saying that they might not roll this out as quickly as maybe the market would like. I don't know what to say. Like from day to day, it's very difficult to predict this market. It's up 1,000, it's down 1,000, it's down 2,000, it's up 1,000. I mean, it's quadruple digits every single day. I would just say fading the moves has worked in both directions. It's been a little bit better to fade the rip because the trend has been down, so it's been a little bit easier that way. But again, the dips have worked multiple times here too. So I can't argue with you, on these 2,000 point down days to buy the dip. But if you're buying stocks when we're ripping up 1,000 points, you're doing it backwards. So if you want to buy stocks, you wait for that 1,000 point down day because you know what? You're going to get another one again. I'm not saying it's going to happen today, but even if we rallied 1,000 again, another 1,000, let's say we get it all back, we'll probably have 1,000 down day tomorrow. So I don't think, again, what Anne-Marie said, it doesn't appear we're V-bottoming. I mean, not from the first bottom because that has been taken out. So this is still a battleground. And in battlegrounds, when you're in battleground trading, it's best to be a fader, fading the big moves. So today you get a rip your face off rally and all these oil stocks and the banks that were just crushed yesterday. I think it's a relief pop. And if I was long these things, I'd be using it to lighten up. Initiating shorts is always tough. I mean, this thing can go, and it's been a tough environment to just say, to control risk management if you're on a day trading perspective, but you do your best, and obviously anything you put on, you try to control the risk as best as you can.
Right. And I should have mentioned this at the top of the show, just to throw, another monkey wrench into the machinery. It's rollover this week, right?
Yeah.
So you're going from your second Wednesday of the month. So you're rolling over from your March to the June. So everyone that has a long in the March and they want to keep that long, they got to sell the March and buy the June, and then vice versa. So what that does, as they transition the volume, it creates pockets in the market because the volume is spread between two places. And actually, I don't know if I can remember any guys that used to just trade the spread. Like they wouldn't come on the floor until the rollover. And one guy was Howard Siegel. I remember Howard Siegel, EGLE. He used to come and he would just trade that spread because it narrows and it widens between, obviously it's going to contract and they're going to be at the same price at expiration, but there's a lot of funky things that go on in between. So that is creating the extra volatility in the market. So the rollover is just another thing going on. So I'll stick with my March numbers through the end of the week. I will transition to the June numbers on Monday, that is.
So individual stock news, there's a little bit. One I just want to start with was the deal is back on the table. So a gift to everyone for the last 3 days, Cyprus Semiconductor, which they thought the deal was falling apart. It fell apart in a wicked way for the risk arbs. I mean, if you were just paying that and holding on for the cash deal, it's never that great of an idea to sit around for the last 20 or 30 cents. Punished severely in the last 3 days. Well, you're getting all your money back here because the deal is apparently back on the table. Spencer Israel, what's the headline?
This was the deal that was announced June 3rd, that Cyprus would be acquired by Infineon. And then, as Dennis mentioned a couple of days ago, a report came out that maybe there was some national security concerns, and that appears to have been not significant enough to warrant anyone to block the deal, because this morning CFIUS, the Committee on Foreign Investment in the U.S., has determined that there are no unresolved national security concerns, and the merger can go ahead for Infineon to buy Cyprus.
It still has to get approved by China, so it's not completely a done deal yet, but they're pricing in that it's almost a done deal, obviously bouncing all the way back there. So impressive move for if you were jumping in and saying, I think the deal still gets done. You're rewarded handsomely with almost a 50% gain here overnight. So congratulations. In normal market environments, I probably would have got down and dirty potentially in that too. I looked at it a couple times, but I'm like, okay, it's back to where it was. And normally I like that, but the market has been just, really beat up really since this. So is it really back to where it was? And, that's why I laid off. And obviously that was a mistake.
Yeah, me too. And I remember looking at it, and I had it on my front quote watch, and I took it off. And I mean, if you would have done it the first day, you would have, had a haircut and really been rethinking things the second and third day. But like you said, under normal market circumstances, that was certainly something to keep an eye on. And I think
I just want to, because some people might not realize that strategy. So I've employed this strategy for a decade, where when you have a rumor about a stock getting taken over and it pops up like 20-30% on the rumor, but then nothing materializes, if it drifts back down to the place where it was prior to the rumor, and if the rumor is still not been, like if they say no, it's a no deal, then the rumor's gone. But if the rumor's still out there, I often buy the stock when it gets back to where it was, because I'm like, if that rumor materializes, that there's something to it, sometimes where there's smoke, there's fire. I'm not taking the risk of, buying the thing up 20-30%. I'm buying it where it was before, even before the rumors. So I almost feel like it's like a, little hidden call option in the stock. So CY would have set up perfectly for that, because the deal wasn't dead. The deal was just, they were worried that the deal was going to be killed. So it would have been a normal setup. But again, I wasn't buying anything in this market environment because I'm too nervous about stocks overall. But in a normal market environment, that's set up really well.
Right. And yeah, you've taught. I remember you pulling that trick with was it Lorillard? Remember that?
I've had it a couple times to work out for me. Yeah, I think
Yeah.
it was. I think it was Lorillard way back when it got taken over by who bought that?
British
Going back
Tobacco.
a couple of years.
Yeah. Yep.
I don't know if it was British.
I can't remember. Whatever. It's
Tobacco. It was one of them. I think it was overseas. Anyways, the stock. So just to recap, I'm getting the prices probably wrong, but Lorillard used to be LO, and it was 57. Rumors came out that it was gonna get bought, and it went to like 67 of these rumors, and then it drifted down for the next 3 or 4 weeks, went all the way back down to the 57 price. I'm like, you know what? I'll go for it, like with that strategy. And 2 days later, it got taken over, I think, for like 70 or 80. So it does work sometimes, and obviously you still have market risk involved with that, but sometimes where there's smoke, there's fire, and that's what that strategy is.
That's a good segue here into a merger. We should talk about.
What do we got? I missed the merger. What do you got?
Spencer, you around?
Yes, I am around.
What merger are you referring to?
You working today? You taking a day off?
I think he's done too. Is there a merger that
No.
Oh, you know.
No, I'm here.
What's the merger?
It was well, this was announced yesterday though. So it was Aon and Willis Towers. AON.
Oh yeah.
Yeah.
Okay, I'm sorry. I just
that's what I think Joel's referring to. That was announced yesterday morning, but we didn't get a chance to discuss.
Yeah, so that was yesterday morning. So that's yesterday's news. Let's go to today's news. We had one major earnings event from last night, and holy cow, did they choose the wrong night to report. I mean, and you could say, oh yeah, it's up 10, that doesn't hold water. But last night we were down another 30 handles after almost a 2,000 point Dow day. They were smacking stocks no matter what pretty much last night after the bell. And SFIX comes out and reports, and holy bash central.
Yeah, let me pull up the numbers here as my internet is being a little bit slow, but there we go. So Stitch Fix reported yesterday after the close, as you mentioned, Dennis. Their EPS actually beat and their sales missed. As you can expect, they did not give good guidance numbers, and really, even if they had, I mean, the numbers don't really matter in a market like we're in right now. But it was a mixed quarter for Stitch Fix. And their Q3 sales guidance was light. Their fiscal year sales guidance was light. And that's pretty much all you need to know. A light sales outlook in this environment does not do you any favors.
No, it does not. And SFIX was worse last night. A little bit of lift with the overall market, 1485. How low did we get last night?
The second 15-minute bracket, you took it to 1187.
I believe that was the new all-time low, I believe.
Yeah. I mean,
I'm not wrong.
Let me see here. Let me take a
look.
look.
I'm going back. Oh, yeah. Oh, it's even below the all-time low rate. Well, actually, it's back above the all-time. IPO day 1448. It got to.
Yeah.
So it's back above that price. So keep an eye on that 1448 because that's the old all-time low. Maybe that can hold, but obviously trade down significantly below that.
It's creeping. I mean, you're talking to a couple guys here that are horrible dressers, and
What do you mean?
Well,
I got a nice fancy shirt. This is actually a nice shirt.
Yeah, but those jeans you wear over to the office, they're all ripped at the bottom.
I wear those lucky
at the bottom.
Well,
Lisa won't even let me wear those out of the house, and you wear them to the office. Yeah, I mean, and plus I need someone to. They shop for you, right?
They send you outfits based on like an algorithm, like what they think you'll.
That's what Stitch Fix does.
Yeah.
Oh, I could use that service, but the only thing is I don't care. I buy all my clothes cheap, like at Kohl's.
Right. They send you clothes that they think you'll like, and you can return it if you don't like it, and they'll send you more. But it's a subscription, and you're paying to get new clothes, essentially new outfits.
Dennis, Kohl's. I thought you were still in garage sales.
I don't wear my clothes from garage sales. I'm too, how I am with.
That's where you buy your kids' toys. Is garage
kids'
sales.
toys come from garage sales, and we bleach the heck out of that plastic toys when we take them in. They don't touch anything.
Oh man, I'm even laughing at my own jokes. That's bad.
Yeah, the toys.
It's creeping. It's creeping back. If I was short, I would say, man, I think I missed the low. I try and throw some bids out there. Not thinking of getting long at any point, but we're just creeping up. There's a patient buyer. I mean, you might have some people that see it down and like, oh, I need to sell on the open. So you might get a whoosh down on that. But right now, I just call it a very, very patient step up buyer here, trying to bring in a short, or maybe even they want to attempt a long in this one.
Dennis, I'm curious what yesterday morning was like for you. It was a historic morning for everyone. We haven't had a limit down in the market since 1997.
Yeah.
So there are, basically everyone who's joined the markets since then hasn't experienced a day like yesterday, and including you. So, like, what was yesterday morning like for you?
We used to have a lot of limit downs. This would have been late 90s, early 2000s. It used to be
fun.
35 points. Remember, Joel?
Yeah.
It's 35 points. We limit down. But it's been a long time, like you said, really since the trading of it. And we did have limit down when Trump. We did hit limit down after hours, but that wasn't during the regular session when Trump got elected.
I meant during the session.
But during the regular session, it has been a lot of years. It actually took me by surprise because I knew that was on the table. And the rules have changed too, right? So this was new rules. So you can't like go by, what was happening 20 years ago. So right. Joel mentioned the rules and mentioned that if we go down 7%, we're going to halt. So it was so weird because we were trading down 7.5. We're trading the entire pre-market session. And then if the rule is, which is so weird, that, during the regular session, if we fall 7%, we'll halt for 5 minutes. Or if we're down 7% for more than 5 minutes, then we'll have a 15-minute halt. So here we are. We trade 4, 5, 6, 7, 8 a.m., 9 a.m. with no impediment. Markets are performing very well. We open at 9:30. The market starts rallying. We're actually going up, but we don't get up high enough to get above that 7%, and then they halt it at 9:35 for 15 minutes. And it was just absurd because the markets weren't even, we were performing very well. We were actually rallying at the time that they actually halted it. But just because we opened so low, that it never got above that 7% threshold. So I was under the impression that we're going to halt the mini. I didn't know they were going to halt the entire market. So at 8:35, I'm like trading out of, or 9:35, I'm trading out of my stocks. I'm like, they halted the whole market on that? I'm like, SPY's still good to go. I didn't think they were halting the whole market. Again, so we learned the hard way. I mean, I guess I got to read the fine print. I knew they were going to halt the E-mini, but I did not know that they were going to halt the entire market because after hours, obviously they halt the E-mini, but they didn't halt all the stocks when we were limit down because SPY still opened happily at 4 a.m. when the regular stocks opened for their session. So weird to be, in that experience. And then I'm panicked. I'm like, I hope the Fed or something doesn't say anything during this 15 minutes because I'm actually short right now. I'm not entirely hedged. So anyways, that was, a weird experience. Obviously something that doesn't happen every day, these 7% moves, but now we know. You learn the hard way.
We're just falling out of bed here. I mean, I
again,
said it before.
It's 10 handles and we're up 90. So, it's this feeling
we're
like
50 off the high. We're 50 off the pre-market high.
We're still up 90. So I wouldn't say we're falling out of bed, but we're giving back some of the gains.
Exactly.
Again, I'm just going to say this market has been the fade trade has been the play when we're up 150 S&P points. What were we up at the most? 140 S&P points overnight?
Yeah, add 50 and 80, 130 when I went to
130 S&P points overnight. Take the gains and run. That's what I would say is take the gains and run because this market has a tendency, especially on the long side, to quickly give back its gains. And we've seen this again and again and again. There's been lots of opportunities to jump in stocks, but it's been a tricky environment. If you're chasing in this environment, you've been losing money. Fade trade's been the play.
Yeah. For me, I mean, you try and look at like your trading and you try and say, what did I do wrong? Like what could I have done better? And, I like to base a lot of my trades on the open, right? Something, Dennis, that we talked about a lot. Over the years, opening price. Well, the problem is you had a 6 p.m. open, and then you basically had 3 opens yesterday, right? Because you had your opening print at 6 p.m.
Yeah.
Then you had your opening off the halt, right?
Yeah.
And then you had another opening, and I didn't drill down on on a minute chart, and our third open was 27.44. And I had a level at 27.35 that I kind of pulled out of nowhere. And I did have the guts. I did have the guts on the way down to buy that. And then, I scrambled. I'm like, well, where was that open? And by the, maybe if we came back up through that third open, and by the time like I figured it out, we were at like 27.50, 27.60. And I'm like, okay, but it was just like we opened at 9.49 at 27.44. We went down to 27.15, and then boom, you were back above that opening print. How many times do you get a look at three opens? Not very often, but
weird day.
Yeah.
It was a very weird day, very volatile day. There could be some more of these days in our future. The volatility is not going away. What does that mean? When we still see the VIX, and the VIX is obviously still trading at 48, and obviously we're going to be down maybe a little bit here. We're 48 right now. Currently, we're 54 at the close yesterday. I think volatility is here to stay for a while until we start getting more clarity on where this virus is going. And obviously we have the oil concern now too. And I threw out that there's potential for financial crisis part 2 here too. And there is. I mean, if it starts getting ugly enough, that could be on the table. I'm not saying that's a probability. I'm just saying it's a possibility. But there's lots to think about. I mean, we said yesterday, if you're uncomfortable, we're having too much cash, you're 100% cash, maybe it's time to start nibbling. I did not nibble, but I got out of my shorts. So I did not want to be short this market at this point in time anymore. Now it's time, I'm market neutral. Now it's time to analyze, maybe start picking some stocks. Like I said, Qualcomm is one that's on my shopping list. It's rallying $73 here today. It's not the day to buy it. Yesterday it's 72.64. Buy on dips, sell on rips. That's the best tips I can give you in this market.
Quick question, Dennis. Do you know the latest time you can enter an opening order on NYSE or NASDAQ? Or is that, I think
what do you, so you're asking for the open?
If you want to get an opening order in an issue, when do you got to get it in?
New York will take them all the way until the stock opens. After 9:30, you can't market OPG though, but they will still accept it because New York is still manually opened by the designated market maker on the floor. So sometimes they don't get the open. Some stocks didn't open for like 5-6 minutes yesterday, even 10 minutes, because it was such a crazy open. They were trying to, get it all figured out. They're doing too many things, and human beings do it. NASDAQ all opens because automated, done by the computers. You have to have your NASDAQ opening orders in by 9:28. That's the cutoff. After 9:28, designated market makers on the floor can still come in with their orders to get in there, but it's closed to most of your platforms. So unless you got a market maker designation, you cannot enter opening orders and participate in that opening print after 9:28.
Okay, thank you.
All right, let's bring on our guest today, Nick Shaheen. He is the author of Create Income with Option Spreads. Nick, tell us what your day was like yesterday. Oh, he's on mute.
Very interesting.
Very interesting. Very interesting. How so?
Well, it was a whole bunch of new stuff. We've lived through crashes, flash crashes, and locking up the screens when the Dow was falling 1,000 points from a lower base. So, but yesterday we had little new dynamics in it where the oil curveball that hit us 25% just added a nice little twist. The problem I think is, by the way, great information there in the pre-open from you guys as to how the market functions before the open. But we haven't seen this many things going on at the same time from different angles. We've seen financial crisis before and this and that, but we have a virus. We don't have leadership around the world, so our imaginations are in control, and those can go wild. So I don't get the TP hoarding. Went to Costco, people have mounds and mounds of toilet paper in their carts and nothing but maybe some water. Like, how is this going to help you fight the virus?
I don't get if you get food, some canned foods. I get you got to have toilet paper, but maybe they're just thinking
you think they'd clean out the pharmacy. That's what I would clean out in a
Well,
virus.
maybe they just think that, I'm going to be so nervous about this. I'm going to have so much anxiety. I'm going to be pooping 25 times a day.
It gives you pneumonia. It doesn't give you the
But yeah, I don't get, either. And to be honest with you, we're not seeing it in my area yet. You're seeing no fear out there yet. Yeah. So certain areas maybe, but in Windsor, Ontario,
fear, I'm seeing illogical behavior. That same day, I left Costco and I went and ate at a salad bar place where you get your own food. And if I got there early and I was like, wait, is this like empty? Is this always dead like this? And then within 20 minutes, it was packed and it was all races. So it's not like somebody was avoiding a certain type of people from certain areas. And I was comfortable. I was like, you guys are here with kids. Nobody has a mask on. Nobody's grabbing Purell all the time. So it was comforting, but there's illogical behavior. So, and we were perched high on the market. So and we were rallying in January. And I was saying, I probably said it here. I was like, what are you rallying on? The PNLs are going to be decimated. We closed the biggest country, second biggest economy for months, and you expect it not to have an impact. And yet we had new highs and nobody was listening. And then suddenly they had a wake up call and whoosh, down we go. So technically, I don't think we're done. I think Joel sent me a question a while back that was pretty good, but that scenario is still in play. We're pretty close to the December 2018 low for it not to be a magnet of sorts. So we will need intervention, fiscal intervention. Last night we got something. So it was not impressive, but it's open. It tells us that they're open to actually spending some money on the streets.
They took that off the table, Nick.
Oh, they did. Oh, there you go.
Yeah.
Well, then I'm surprised we're still up.
Oh, no, it was just a report. Again,
okay, I'm sorry. Fake news.
There hasn't been a meeting yet.
Questionable news.
They're supposed to meet today. They haven't even met yet.
Well, they didn't offer it yesterday. They said they were working on it.
They said they're going to meet today to talk about it.
Okay, I'm sorry.
So my point is that they told us they're open to it. So until now, they haven't said anything like that. And if I was the president, I would do something like, hey, we've got a virus. We know it's bad. We have the best people on the planet. They're very well funded. We gave them $8.5 billion. We're ready to give them more. They're going to fix it. It'll take time. On the other hand, here's interest-free loans for any business that needs it, so it doesn't close its doors during the tough period of time. We've seen this before. We can do it again. Just say that. Everybody will move on. Because everybody's freaked out about this or that, though they need to know that somebody's watching the wheels. And so, we need to stop this imagination.
That's why we rallied here last night. That's why we rallied, because now all of a sudden it's like they're taking a little more serious and they're watching the wheel. So the market's more comforted to know that. And I think a little bit, obviously we were sold off yesterday, but Trump tweeted out yesterday, basically just saying that this is, the normal flu kills more people. And people really attacked that tweet. I mean, he was under complete attack for that, rightfully so, because he's not doing the math.
So there is no math to be done. Are you kidding me? We don't have the denominator number. As soon as I mentioned it like a week ago.
I want to cut you off though. There's definitely some math to be done. You can easily say this is higher death rate than 0.1%.
I can't say that. How can you say that? Where do you get your denominator number? We tested nobody in the US. We don't have the denominator number. There's no ratio. It's an absolute number.
World Health Organization 3.4%. I'm fairly comfortable.
Where are you getting that number from?
Fairly comfortable, Nick, and I don't want to get an argument with you about this, but fairly comfortable that the death rate on this is probably going to be significantly higher than the seasonal flu. That's all I'm saying.
It's not 3%. It's nowhere near.
Even if it's 0.5%, it's still 5 times the seasonal flu.
Well, every headline I read is so confusing. It just creates, they say, okay, they found 15 new cases in China. Is that more or less? Show me a table. Show me a consistent. The reports are so freaky that nobody can make sense of them. So we imagine the worst. And the fact that they report these ratios is very misleading. I think they should shut up and just track how many people are dying and how can we stop that from happening, instead of just reporting numbers that don't make sense to anybody outside of actually the reporting agency. So
Nick, the one thing is that we're not getting accurate information.
That's what I'm saying.
That's the thing. Yeah, but
that's my point.
But the information that you're getting, okay, I mean, that's what they're implying these numbers are. Chances are the numbers are worse.
Okay, I bet you anything the numbers are way better. I'm willing to bet you that lunch. I bet you that lunch.
You owe me a lunch?
Whatever you want. Yeah, the lunch. The numbers the numbers are way better because we don't know how many people are infected. And luckily the kids are so far immune, right? I don't think any kids died.
I mean, in the US, you can't do any math in the US at all. I completely agree with you. We don't have enough case numbers here, but you are getting some information from other countries now. I mean, China's starting to get past this.
China, I don't believe any of the numbers out of China. I throw all of those out. South Korea probably has the best data because they have the most tests. I think they tested like 100,000 people. So they have the best test. And the last time I did the math there was the end of January data, and it was definitely under 1%. The death rate.
1% is a big difference than 0.1%.
I know, but I'm saying my point. No, I'm listening. My point is we don't have a ratio. An estimate of a ratio is bunk, in my opinion. I used to be a numbers guy, and to me, to tell me it's 2%, it's not. So don't tell me a number. I don't want to
I'm
know
not saying it's 2%. I'm not saying it's 3%. I'm saying it's significantly higher than 0.1%. And I think that's what the market is nervous about.
To me, I either know it or don't know it.
And that's fine. You don't trade on that. You trade on technicals. I trade on headlines. The reason that I went, and bought puts, the reason that I went and sat on this show for 3 weeks prior from end of January to early February is because the fatality rate was significantly higher than the flu. There was a trade there to be made money by looking at that fatality rate. We trade different. You trade pure technicals. You don't look at that stuff. You don't bother yourself with the headlines.
I was short.
Both work.
I was short at the same time you were short for different reasons.
Why were you short? Because
I knew people were going to freak out and they were going to shut down the world. Boom, it happened. That was my reason. The P&Ls were going to get hit and nobody was acknowledging it. Nobody. We set new highs. I was tweeting it. I was like, how could you set new highs when we shut down the biggest country on the planet for 2 months at the time? They had
and we were saying the same thing on this show. So
yeah, I'm with you. So I know the impact to the bottom line from this virus. It's devastating because we made it devastating. Everybody just said, I'm going nowhere. I'm touching nobody. I saw a guy at Costco who was wearing a face mask that was camo. He not only went and bought a face mask, he went and bought one that's got designs on it.
I don't even think we're there yet, though, Nick, over here, because what you're seeing, maybe you're out in California and you're seeing people scared. Joel, I'm going on the streets here. I don't know what it's like in Detroit, but I go on Windsor. There's no fear here. There's none of that yet. Yeah, I asked my one buddy, he owns a retail store in Toronto, and he's like, I'm like, have your sales suffered at all? He's like, no, zero. He's like, nobody's talking about this.
Yeah, but
so maybe it's going to come this way. But if you're predicting that there's going to be that fear, I think that's
already
still
there. I'm predicting Italy is shut down. Nobody's allowed to leave the house. The whole country today. Did you read that? The whole country.
I read all the headlines. Statement. So what do we do here? We've sold off. So what are you calling on the market? So let's get your analysis here.
This bounce.
It sounds to me like you're bearish.
No, I'm saying that this bounce is predictable from past history. Somebody showed me a table like 100% of the days after a big drop like that would be positive. It could sustain through Wednesday, but I'm saying to my people, the scenario of 2,500 to 2,480 is not off the table. Technically, let me share the SPX. It depends on where it closes. Actually has an inverse head and shoulders that targets that, and it's easy to see technically. So I'm taking the emotions out of it. And it is not crazy to expect more downside. So people are going in, we're going to have a V-shaped recovery. I don't think we will without major fiscal spending. And then really the biggest problem is this. We are headed to zero interest rates based on the TNX charts, if not negative rates. As soon as they lost a neckline not too long ago, technically, it should be headed to zero because the target is below zero. So don't know if we're going to go to negative rates in the U.S. And then there's also the inverted, the 10 to 2s as far as yield curve. They were tracking it when it was inverting. What does it mean when it spikes this much? So isn't that good for the banks? And why are the banks falling? There's just too many unanswered questions for anybody to say with certainty we're doing this or we're doing that. Plus,
so it's funny. We've been arguing for 5 minutes here, and we're on the exact same side. We're on the exact same side.
And my beef,
just different reasoning.
Yeah, my beef with the argument is that these reports about the virus were eating into the media's hands with the shock factor. It's devastating that people are getting sick, but people are not dying at the same numbers from the regular flu. So here's a proposition: report the virus right next to the flu in one table. Then people can say, okay, this is something I know, the flu. Let me compare this to it. Let me see how it progresses. It's going to get worse. That's what people say. So let's see how it progresses. Wouldn't that be the smartest way of doing it? What we know, put the baseline, the regular flu, and put the unknown, the new flu, and let's see how it's going to progress. They're in the same family.
Yeah, let me hop in here too. I mean, agree. Great points, great argument, or great discussion, guys. There are a lot of people that have it that are having like not even going to the doctor. Like there's
That's my
people that
point.
there's people that that have the flu. that
We've
just
given this
shrug it off.
argument.
Yeah.
We've given the same argument that
Yep.
Nick has a dozen times on the show.
Yep.
We don't know.
So if you report numbers to a CFO, for example, and you come to them with a huge unknown on the denominator of some ratio, would you present it as fact, or would you say, I really have no data on this, but here's so far, and
This
might
is
be
what could
completely
happen.
off?
I mean,
No,
yeah,
this
but
is-
if you're not doing any math on it at all, then nobody's going to do anything
only-
for a crisis. If we're just
No.
completely ignoring it.
No, I'm with you on that one. I'm not the one that needs to do the math. Let the professionals do the math.
I need to do the math because I tell you, I made a lot of money by doing the math back in January.
Okay, so you're talking.
It
you're talking
depends
from
on
a,
how,
I'm talking from a reporting purpose. Don't report what you don't know. That's what they're doing. They're reporting what they don't know. We don't know how many people have it. I bet you millions have it.
I think so too.
I read
think so, too.
articles where it says it's going to kill 15 million people. And
It's possible.
from really smart people. These are people that I trust with everything. And they're telling me this could kill 15 million people in a year. So
I completely agree with that. So
Well,
this is
I don't
the
know
same
about
arguments
that.
that I've been giving. So,
That's
but you're reading those numbers too. So if you're not going to look at any numbers, I mean, then you're not coming up with that analysis that you just
No,
gave. You
I'm-
got to
I'm
look at some numbers.
I'm looking at one number, death rate, the number of death, the absolute number of death. It is unfortunate that we lost 15, 20, 30 people in the US. I don't know. Are we up to 20?
I think 22 or something.
22. Okay, that's really the most important number. If that starts to be exponential, then that's the only real number we have. They cannot fudge that number. That number cannot be fudged. It
Unless
cannot
you're
be
from China.
manipulated.
Unless you're reporting out of China.
I didn't say that.
I'll say it. We've said it on the
You know
show.
what? Don't quote me on this, but I talked to a physician that's talked to another physician that said that they had a patient that died 3 years ago, and they couldn't figure out what the person died from.
Oh.
And I don't know what kind of toxicology or whatever, what they did, but that, what the symptoms were, what was going on. And that doctor kind of thinks that person maybe had the coronavirus then. So it's a lot of unknowns. There's a lot of things in the market.
Well,
Nick, we really appreciate it.
I
man,
agree with Nick. I think there's a lot more cases out there. Like people are saying potentially tens of thousands. I think Nick's right. I think it could be, even 100,000 people that already have this thing. Like, I think the bottom line is containment for this is probably out the window. Do you agree with that, Nick?
I'm sorry.
Like trying to
the last bit.
contain this thing.
Oh, yeah.
But they're still talking about how to contain it. I mean, this is we're
No.
kind of past containment, in my opinion.
No.
Now it's a matter of just, helping
Control the
those people
spread.
who get sick and not getting the health services and the hospitals taxed too much, that we can obviously help those who get this.
Yeah, that's why I don't wash my hands ever, so I can build the immune system to all my jobs.
We joked
Remind me
about that. Just on a side note, I was joking about that with my wife, and I was like, you know what? If you get this, you probably want to get it early before everybody gets it.
Yeah.
Like maybe we should just go out and start licking, handrails and subway.
We did those in the olden days. Hey, I fear so and so has a chicken pox or whatever. Let's go.
They did do that. My mother-in-law said the same thing. She's like, because you want to get all the kids getting chicken pox at the same time, so when one gets it, you bring them all in the same room so they all get the same time and they can get rid of it.
Yeah. All right, folks, that was
Crazy.
great.
Yeah,
right.
Nick, thank
All right,
you,
fun
thank
discussion,
you, thank
Nick.
you.
Thanks a lot, Nick. All right.
You won't get this on CNBC, folks.
Oh, you will, some of it. So we can't
Not
keep
Nick,
saying
and,
that.
not Nick and me and you all in the
Won't get
same
me.
room.
Well, maybe eventually. They don't
all
like
in the
us on
same room
CNBC.
together.
Hey, can we talk about like the oil stocks here? I just want, I mean, they were all, at least last I checked, were all rebounding here this morning, just with the rest of the market. But I want to talk about the move in some of these oil stocks just off of yesterday because it was pretty wild.
Huge moves. I mean, the wicked moves. And look at this one, FANG. Diamondback Energy, which this was a Kramer favorite, and and just showing you how much this probably was one of the better performers, held up very, very well. I mean, you think about how ugly energy stocks were in 2019, 2018. This one held up really well. You can forget about that. It's obviously gone now as being one of the better performers. It's just playing catch up here now. 90 at the beginning of the year. This is $95. $26 yesterday for one of the supposed best in breed. Diamondback Energy, FANG. Unbelievable fall yesterday. Fell over 50% at one time. Getting a little bounce back here this morning, up 13%. That looks like, wow, what a move, up 13%. But when you put it in perspective, it's getting back like a quarter of the losses it had from yesterday or less than that. So these things are just ugly. And I mean, there's so many charts that look like this. You've got to think we're going to lose some of these companies. I don't know if FAANG we're going to lose, but you start looking at the smaller ones like Apache, APA yesterday. That was down more than 50%. You just look at how many were falling 50% yesterday, and you start thinking, can these companies survive at oil if it's $32 a barrel for a prolonged period of time? Probably not. So that's the concern. So you can come in here and say, wow, these things are cheap. They've been cheap the whole way down. They continue to get cheaper. Yes, it felt like a capitulation event, but some of these stocks, I don't know which ones, but some of these are going to go to zero. So you got to be careful just randomly coming in and buying, thinking, how can I go wrong? This thing, APA, was $40 a year and a half ago. It's $9 now. How can I go wrong? It might be one of those that don't survive. I don't know if it will be. Some of them that survive might be good buys here right now. But, we talk about ExxonMobil and Chevron. With ExxonMobil's at $40. There's major problems in the entire sector.
Right. And these weren't great performers beforehand, right?
No, this is like beating up on, kick them when they're down. You think about the oil move, and yeah, exactly. The oil stocks have been really beat up, and then they just fall another like 20, 30%, a lot of them. Some of them 50% yesterday. Incredible. Punishing the weak.
Yeah. Yep. And, even when crude, we had some momentary pops in crude. When did we go to $65? When they bombed that Aramco facility? When the hell was that? That wasn't very long ago.
That was the gift of all gifts.
Oh, yeah.
Holy,
Yep.
when we went up that day. Let's look at the chart on that one, Joel. You can probably pinpoint it there. Grab it, Spencer. It gave it back quickly. It's that little island top there back.
It was January.
Yeah, it was like the first week of the year, wasn't it?
Yeah, and then it gave it all back the next day, pretty much, and then it just continued to leak. That was the gift of all gifts.
Yeah. So if you play these things for a rebound or your targets or whatever, take them long term. I haven't had any exposure to energy. I can't remember. Maybe I own some preferred.
I just have it
stocks
indirectly
energy.
in some of these Canadian mutual funds, and
even
I wish I
remember.
didn't have any.
Yeah. But I do have for you crude traders here, you got a nice setup. Yesterday was a perfect setup, just because you settled in the middle of the range. But if you're looking for more juice on the upside here, 34.88. That was your high from yesterday. 34.60. That's your current high. So you get above $35, clear that area, close above that area. You got some room to go on the upside. But as of right now, double top. Probably everyone that brought out, that took the chance yesterday. I mean, we did go down to 27.34, and that took us back down to the 2016 lows. I think that 2016 low in February we hit 26.05, and just another perspective here. If you look at the monthly S&P chart, I mean, if you just came in today and you just all of a sudden you're new to the markets and you look at this monthly chart, yeah, we had a big red candle in February. Then you had we're working on a big red candle here. But in the overall perspective of markets, even since 2016, people are still sitting on a lot of gains. So, keep your, especially when the markets act like this, keep your eye on, a time perspective. If you're hopping in here and buying the dip, there's people that bought the dip a long time ago and are longer from much lower positions than where you're taking your long.
Can one of you explain to me why the auto parts stores were all up yesterday?
I noticed that too.
Yeah. O'Reilly, AutoZone, and Advanced Auto Parts.
Was there a headline in the sector? Because I had a trader from Bright asking me the same thing. Like, why are all the auto parts suppliers up? And I gave it about 2 minutes of looking. I was like, I don't know. And I was so busy, it was hard to look. But I didn't really see a headline.
Well, just pull up a map of the S&P 500, and it's all red with a couple of.
And there's nothing. Yeah, you're right.
A couple of exceptions. Dollar stores you would expect. We talked about Clorox yesterday. They got an upgrade, and then you see, this little pocket of green. O'Reilly, AutoZone, and Advanced Auto Parts. And I don't know. I don't know where they're up.
Did anybody upgrade them today?
Today?
Just talking yesterday's move.
Yeah. Oh, yesterday. Well, they're buying it yesterday. They're going to upgrade it in a couple days. No, I don't know.
I don't know.
They've been beat up. Anne-Marie Band. We love Anne-Marie. She says no one will buy new cars but service their own cars.
Well, when you go into a recession, there's a good point to that.
Yes.
I mean, there is a trade on that. So it's a joke, but again, that's some truth to that. And maybe she meant it seriously. There is some truth to that, but it's just like a day they were selling everything. I don't know if they're already thinking, oh, I better buy these auto parts suppliers because I'm going to be, these old junkers we're going to be driving because we're going to drive new cars. I'm not sure the market's thinking that far ahead yet, but there is a trade there for that. I've played that before.
Full disclosure, I will never do anything on my car. I will probably make it worse if I tried to work on something on my car. I just take it into the shop.
Okay.
And Dennis, you drive your car into the ground. I know that. You still got that old F-150. Remember when you bought that?
F-150 is a 2018.
Oh, the other one. Remember during the financial crisis?
2019 is my F-150. So
what was your old one? You bought one during the financial crisis.
I've always had F-150s.
I
had a 2009. Yeah, I had the 2009. I traded it in 2019. I drove it for 8 years.
Remember, I told you they were so cheap. Remember, they were just giving. I told you to buy two, and like scalp out of.
They were giving them away during the financial crisis. I had over $11,000, and I paid cash for it. I got over $11,000 in discounts because of cash deal. They were just like cooking for cash. So on my last F-150, it was like the sticker on it was like 60,000. I walked out like. It was like 40 something. It was just ridiculous. So, I mean, that's, back during the financial crisis, this was when Ford was $1. I mean,
remember that they were giving a share of stock, weren't they?
Yeah, they're giving a share of stock. You get a share of the stock for $1.
Wait, they were doing that?
They did. Yeah, they were giving away stock if you bought like you got 1,000 shares of Ford stock or whatever, and it was trading at $1.
Oh my gosh.
Yeah, they were back in the financial crisis.
What do you need a big truck for?
I don't know. All that stuff I buy at garage sales.
Okay.
All right, guys. Any final thoughts heading into today?
It's just a day to, I think, keep fading. So I'm not chasing. Like if you're coming in here and like I said early on the show, if you're coming in here and buying all your stocks now, you're doing it backwards. This market has given you ample opportunity on pullbacks. I believe you will get another pullback here again. We were talking with Nick and you start thinking about the news flow. And there's no fear where I'm at right now. I think eventually there's going to be fear. So I think the majority of places where you are right now, there's really not that much fear about this thing yet. And if it continues to spread and the deaths start to climb, like don't worry about the death rate, but just talk like what Nick said. If the absolute number of deaths continue to climb or starts to get in the triple digits and then the quadruple digits, that will spook a lot of people. So, and it's, inevitable that those death numbers, the absolute numbers are going to continue to climb. It's not going to stop at 22. Like if there's 1 million people that have it, and let's just say it only is the seasonal flu, that's 0.1%. But like I said, I think it's probably fairly safe to say it's higher than seasonal flu. I hope it's under 1. I really hope it's under 1. But even if it's 0.5, it's still 5 times more deadly. You start looking at that way, there's going to be a lot more people that die from this, unfortunately. That will spook the markets. That's why I hate to chase this market here. I don't think the bottom's in.
Let's see. Your pre-market high is 28.79. Would love another look at that. Couple numbers sticking out ahead of that. Your former low of the move at 28.5375. You got to give some significance to that. Above the pre-market high, I mean, it depends if you're a day gap trader. There is a void in price going up to that low from Friday at 28.98. I have a weekly number at 3,000. So we get up there, I'll be I'll be one happy person, but I'll be laying out some shorts as well.
All right. Thanks to our guest today, Nick Shaheen, and thanks to everyone in our chat rooms on YouTube and premarket.benzinga.com for a free 2-week trial and a subsequent discount to Benzinga Pro. Click on the link in the description of this video on YouTube. You can always rewatch the show on YouTube or catch the podcast of it on Spotify, iTunes, SoundCloud, Stitcher, or TuneIn. Shoot us an email, premarket@benzinga.com for any questions, comments, or concerns. Give us a call, 734-494-0246. And please remember that all the information from our show is meant to be used as informational purposes only and not for investing or trading advice. Everyone have a great rest of your Tuesday. We'll be back with you tomorrow.